What's going on, guys? Welcome back to another video with me, Ross-rfx. Now in this session we are going to be covering overall directional understanding, larger time frame bias, and how we can start to determine where the overall targets for price are for long-term and short-term trades. Before we get into the video, guys, if you want to help us get to our goal of 3K, make sure you hit that sub button, hit that like button. If you want to be notified when we upload fresh videos, hit that notification bell. And of course, drop us a comment down below to let us know if we've helped you. If you are looking to join our Discord community, link is down below. Hope you all enjoy the video. So, as we just stated, we are going to be talking about the overall directional understanding of price and how we can have longer term targets inside of the market, and that's how we're going to start to integrate our smaller time frame trades into that. So very simple, and it's something that is hard to understand and grasp when you're new, but once you start having a more in-depth understanding of price, it becomes very easy to have these targets and hold on to them. In the beginning, for many traders, you're going to notice that you will deviate away from your overall targets. Now, a very simple way of doing this, okay, is coming onto a larger time frame like the 4 hour and just taking a step back and looking at what you have. Now, first of all, we always want to establish our swing highs and lows, because remember, these are the points where we have directional shifts in the market, either sells change to buys or buys change to sells, and it gives us a nice understanding of what we can expect for any move. Now, as you can see here, we have taken out this major high after pushing aggressively up. Now, this is the US dollar to the CAD dollar, so you can all go and find this pair if you would like to. Of course, we'll walk you through this anyway, so give you a chance to rewatch this video at any point where you may need to and essentially revise what we're showing you, and you can start to really have a nice good understanding of where you expect price to go to or get to on any given move. So first thing we've done is we've come to this chart on a 4 hour time frame. Now this time frame is, for me, a good one for an overview as a whole. It's a very common time frame to be used, but you don't have to use the 4 hour. You can use this on the daily, you can use it on the 15 minute, the 30 minute, the 5 minute, the 1 minute, whatever you want, as long as you know where you stand in the overall picture of price. So straight away off the bat here, we can see that we have taken out that major high, as I stated, to the left. We left impulsively after sweeping a low, leaving clear imbalance after we created a high. Now we came back down and we cleared most of the imbalance here. We pushed high again, putting in a short-term high. We came down, putting in a low. We then shifted towards this center area, pushed low again, so we have established that we've put in a high, a low, a high, a low, a high. So from this point, overall, I am looking for price to run this low. Now, why would we be looking for price to run this low? Now, it's pretty simple. We understand the overall impulsiveness in price is taking us up. Of course, we expect this. Now, when it comes to trade movements overall, we are going to see this a lot of the time. Now, you can go back and check this out if you like, or you can take my word for it. It's completely up to you, but we're going to show you examples of this and walk you through how you can start to manage your own trades based off of this understanding. Now, when it comes to buying and selling pressure, you're going to see buying or selling pressure coming in at key levels and from lows and highs that are being manipulated by the institutes. Now, at this point, we manipulated this low, taking out previous liquidity and shifting higher. So we know this area holds value for us. Now, if we have an impulsive shift, a lot of the time you'll get your impulsive shift and you will have a trending move back. Now, it won't necessarily be a super clean trend. You may have some deviations, push down, but a lot of the time what you are doing is you are generating liquidity across these levels. Now, one thing that we always need to remember is for every larger time frame move, there has to be smaller time frame corrective moves which will change trends. So for example, if we drop down to the 15-minute here, we'll go back to the bigger time frame in a second. You can see here that we have played consistently between sell moves into a new high, into a sell move, into buys, into a new sell move, into buys, into a new sell move, into buys, into a short-term sell move, into some more buys, into another sell move, into some buys, into another sell move. So we're having that consistent change in buy to sell movement. Now, if we are looking at this in any time frame or at any level or in any context, we need to establish what our most recent movement is. Now, like I showed you on the larger time frame, we have the same thing here. We understand that we have impulsively pushed higher. This is again out of context of the large time frame, but just watching this time frame. And you can see that we come down, we take out a low, we establish a new range from here to here, we play back to the fair value gap, and we drop lower. So we are establishing lower highs and lower lows. Let me just mark these up for you. Lower highs and lower lows. So the whole time we are putting in lower highs and lower lows, our targets will always be the low. Now, why is this? Because when we are in a downwards moving market, whether it's a corrective move, whether it's a long-term move, whether it's a 1 minute, whether it's a 5 minute, whatever time frame it may be, unless you have something on a larger scale, so for example, like this POI right here, yeah, we didn't quite tap into that, but we got close enough. If we have smaller time frame ranges moving in a downwards motion, we will always expect the lows to be served as liquidity. Now that rule carries over onto an upwards trend, so we would expect the highs to be delivered as liquidity, and it carries over onto every time frame. So again here, at every point we put in a new low and we pull back, we should always expect price, if it reacts at a high, so for example if it had tapped into that, even though it didn't, we would still be looking for this low to be ran. Now that again is a very simple concept because it's simply following the high to the low to the high to the low to the high to the low, consistently tracking where your targets are, and your targets are going to be the low. Most of the time the highs will remain protected and the lows will be the areas that are swept. Now it's only once you break out of this smaller time frame movement that you have that you will start to follow highs being taken. Now look at what we were showing you this morning. You can see that we tap into this higher POI right here and we break down significantly. Once we break down, we can start to say we have sell side targets now. Why do we have sell side targets? Because we are moving in a downwards trend. How have we confirmed this? Because we've broken down major structural points on the previous order flow. So the order flow was traveling in this direction. We know that because it was creating higher lows, higher highs, higher lows, higher highs, higher lows, higher high, until we fail to put in another higher high and we start to break down the lows. So from this point, we will only aim for low targets. We will not aim for high targets. Why is this? Because unless we interact with an area, so for example, a POI, and we react strongly, we will only expect the current order flow to continue. Now again, if we track the higher highs and lows here, you can see consistently the low is ran, the low is ran, the low is ran. Now we do have a slight deviation here where we do actually run a high, but this was just a liquid grab essentially because a lot of people were probably selling here. So they swept the liquid and continued to go lower. Now if you look at what we spoke about this morning, we have this high, this low. We came up towards this POI, but our overall target is still this low. Now, why would we expect this low to be ran? Number one, we're still playing below the previously formed high, and we're inside of the previously formed low. So we know that that is the range that we're playing inside of currently. When we come out to the larger time frame, we look at this and we say to ourselves, well, where are we in price overall? We are playing from a high. We've tapped in. So where would we expect price to run to? If we're in a downwards movement, which we are, we would expect the low to be taken. Now, of course, this does not mean that it's just going to deliver to the low straight away. It's just going to deliver there. Does not mean that. But what it does mean is in a larger time frame move, we have the directional bias of down. So when we come down to our smaller time frames, it allows us to start to look for the smaller time frame order flow aligning with our larger time frame understanding. So for example, if we have a 4-hour low and we're in a downtrend, we're going to look for smaller time frame shifts to take us to that level. Now, exactly what we've done here, we can see if we follow this, we put in a swing high here, we came down, put in a short-term high, short-term low, we tapped into an unmitigated order block, we took the low because we were still running in the downwards direction. At this level, just before our target, we have broken a short-term high, played back to a POI, and shifted higher. So we may very well come back down to this level and interact from here. Yes, we may do that because our new range is coming from this low up to the high. But what do we understand overall? We understand that we can't just take the smaller time frame range and say, well, now we're going to aim for here, and now we're going to aim for here, and we're going to aim for here. We always want to keep in mind, unless we take out a larger time frame high, for example here, our bias is still going to be sell. Now that does not mean that you can't buy this up. Doesn't mean that. But the most probable trades and the best setups come from where exactly? They come from the alignment of larger time frame moves with smaller time frame moves. So for example, if we are creating this imbalance here, we've had an impulsive shift to the upside, we haven't pulled back to create that efficiency. If we start pushing high here, we are still going to be looking for shorts from this area. Now, why is that? Because we understand that the short-term structural movements are shifting us into buys. Okay? So we would look for buys to bring us into our sell move. Now remember, the reason for that is because every time we have a significant shift, there is a sell order flow being delivered here. We then have to, if we have a buy area, we have to deliver buy side order flow to get there. So what is the first sign of price changing order flow to bullish or bearish? It is a break of structures, right? But regardless of this, this is not going to change our bias to we are now bullish and we're going fully bullish. We are only bullish up until our POI, and then we will look for bearish. Now, how do we determine if price is going to start delivering the bearish movement again? We track our smaller time frame ranges and we look for a breakdown of a significant low. We look for that order flow to come back in, and this is when, if we pick up a high and low here, for example, and we say we're going to short this POI, purely for example, we can then start to aim for the low, the major low, which is exactly where we are right here. Yes, we've had an aggressive spike here, of course. We haven't pulled back to our POI, so we're not going to confirm any buys just yet. But we still have a clear POI, which is unmitigated from our last larger time frame swing. So what we're seeing is sell side, sell side, sell side, sell side, sell side, sell side, into buy side, buy side, buy side, before we tap in to go short. Now this is going to be the same across every single pair, the same across every single asset. It doesn't matter what you're trading, it's always going to be the same. If you are seeing short-term delivery of price, expect that to continue to deliver it. Okay? Expect it to continue delivering. Now, this is a great example over here. We're going to drop down to the 1 minute and we're going to walk you through the individual order flow from the buy side move here after we came up and took out this high to this POI, which is a larger time frame POI, which comes from this level right here. And then we're going to show you what you would look for if you're going to see order flow shifting and how you would change your bias to short-term understanding of trend. So we're going to cover it from this low because we will literally be tracking this all day. But we'll go to the 1 minute here and we'll show you all of the areas here that we have. So we put in a rather major low down here. And if you look what we do, we break the high. So we sweep liquidity. So remember, swing structures are structures that have had price moving like so. We sweep a previous low. We then break up a high. So we know that that has manipulated previous lows and taken the liquidity from them. So based off of that, this tells us order flow is shifting high. We know we've broken a previous area. We know that there's a POI. Well, there may not be, but if there is a POI down here, we'd expect it to run back towards this POI. Remember, it doesn't have to get there. Pullbacks are not a necessity, but continuations are a necessity if you're playing inside of a trend move. If you're consolidating, obviously it's a different story. So you would expect price to run back, tap into that area and continue higher. Now what you're going to see is the same thing happening here. Now if you look what we have, we manipulated the low, we shifted high. We play back in, we manipulate a low, we shift high. Right here we don't pull back to these areas, but like I say, pullbacks are not essential. We play back down, sweep out. Again, we leave an area, we push high, we don't run back to it. We create a new low after manipulating. We then shift high. Now look what happens here. Look what happens. We have this push, pullback, push. We then have smaller time frame ranges, so you're having the smaller time frame moves play like this. We come back to our area right here, very close to it anyway, and then we start breaking down previous lows. So that tells us, okay, well, they've stopped targeting highs. What is the reason for us not targeting highs anymore? Because we are seeing an order flow switch at our POI. So it's only at this point when you tap into whether it be a fair value gap, whatever it may be, supply, demand, order block, support, resistance, whatever it is, but you're looking for the same thing. You're looking for heavy displacements below previous lows. So in this case, this low would not be a major low because it didn't put in a high. So we're looking for lows that have put in highs. Okay. Then from there, if you break down these lows and you put in a significant high which has manipulated a previous level, you would then look for price to play in, displace lower. You would then look for price to play in and displace lower, continually aiming for lows. Why will we aim for lows? Because we know the order flow has changed, because we've broken down major swing structures, and we have confirmed it by putting in a high. In this case, that low is substructure, but we put in a low. We come down and break this, so we actually put in a new lower low. We put in a new lower high, lower low, lower high. We've confirmed our downtrend. Now, whether you took a trade here, whether you took a trade here, it's irrelevant, okay? What we're talking about is the directional understanding of price. Now, after this, we would only aim for lows to be taken. And if you follow price, look at what happens to the lows. Lows are taken, lows are taken, lows are taken, lows are taken. We get down to here. Lows are taken. This is market close, by the way, so don't worry too much about that price action. The low is taken. Price pulls back. Yes, it does liquidate these highs here, but it's very minor. It doesn't close. If you look at the way that the price is closing in the trend direction, you close very strongly below. and you continually push lower. So here we close very strongly below. This is purely wicks. It's just manipulating people out of the market here. And consistently we're aiming for lows, the low to be taken. The low is formed, we aim for the low to be taken. The low is formed, we aim for the low to be taken. Exactly the same as down here. We've pulled back, but remember, what is a pullback? A pullback is not a necessity. So regardless of whether price pulls back to, so let me just cut this back here. Whether price done this, okay, whether it came up to here and then drop down, we would still be looking for the low to be taken. Whether price pulls back to here, then drops down, we'd still be looking for the low to be taken. Because we understand any upwards movement inside of here is only internal movements bringing us back to a key structural level in our trend direction. So following the trend direction itself is the most efficient way to have a more probable target for price. Now, all of this is situated inside of a high to low to high to low to intermediate high to a new low to a high to a low, right? So we're always looking for the same thing. If we're delivering lower, 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 we would aim for lows until what? Until we come into contact with a major level. So for example, this higher time frame swing low here. And this is when we would look for our smaller time frame moves to start pivoting. When they pivot and they start taking out highs and confirming that, that is when we can start aiming for highs. But where would we only target if we are seeing highs? We would only target our last major high. So in this case, on this time frame, this would be our major high. So we would only target the inefficient areas inside of here. But of course, like we've said before, this would technically be a pullback move. So we don't want to force it to come all the way up to here. It doesn't have to come up to here. But there will be several inefficient areas across this move down that you will look for price to play lower off. How would you determine if it's going to play lower or not? By following the smaller time frame shifts in order flow and structure. So we're going to go on to another pair and take a look at another example, and that example is going to be on gold. Now, we covered this in our live stream today, so many of you guys would have seen this and you will know what we're looking at overall for this. So as you can see here on the 15-minute chart, we have been traveling down significantly. We reacted slightly off of this area because we were traveling up at the time. We broke down significantly and we've continually played to our low, high, low, high, low, breaking down until we tapped into this area here, which I haven't got marked, but it is this POI right here. Okay, this is where we saw a switch in order flow. Now, how do we determine this switch in order flow? Because if you look here, we have a major high, we put in a low, we run that high, we put in a new higher low. So at this point, we'd say to ourselves, okay, well, we are clearly starting to run highs here. Now, always keeping in mind the larger time frame, because when you see these short-term order flow switches, they're going to lead you back to larger time frame areas. Now, if we look here, what do we have? We have a major low. So remember what we're looking for a major low. We're looking for a sweep of previous structural lows and then an impulsive shift higher. So we can see that this low has clearly ran these previous lows and shifted higher. Now, yes, we could have come up and played back in and gone high, but we didn't. We continually pushed higher, 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 higher. We didn't put in any major highs because a major high would have to do what? A major high would have to sweep a previous structure and break down impulsively. We didn't do that. So we put in no major highs. So we know, okay, price is expanding pretty drastically, taking more highs. We put in a larger time frame move. How do we know it's a larger time frame move? Because it comes all the way back down here, break structure. Again, you can follow the smaller time frame shifts. You can see it doing the same thing. Doesn't mean that every time price moves it's going to be super clean and you're going to be able to catch a trade. It's not what it means. What it's telling you is using the smaller time frame structural shifts, you can start to determine, okay, well, if I see this form, then I might look for an entry here and I might aim for this. Then lead it to your larger time frame. Collectively, you can gather up every time frame and lead it into an overall target. Now, in this case, if you look here, we understand that we broke major swing high, we put in a swing low, and we consistently pushed higher. So we say to ourselves, okay, well, this is the main structural point. We know this because it took out major structural lows and it caused the break higher. These structures are only minor because we were already traveling in an upwards direction here. Yeah. So remember, our major points are going to be where order flow is traveling like so, and then it shifts down. That would be a major point. When order flow is traveling down and then it shifts up, that would be a major point. Exactly the same as here. Order flow is traveling up, it shifts down, so this is a major high. Price is traveling up, starts to shift down. This is a major low, but of course, like I just stated, we understand that the larger time frame is doing this and then doing this. So this upwards move is part of the new order flow from the larger time frame low. Now, if you ever get confused on the smaller time frames looking at this, just go to a bigger time frame and it will clear up all of the mess that you can see, and you can start to really establish, okay, well, we ran a low here, we broke a high, so we know this is the swing low. Then we're not going to say to ourselves, this is the new swing low here. Why? Because it is a swing low, but on a smaller time frame. Because what did price not do here? It was not consistently traveling down like this. Yes, we had a downwards push, but look at the way this is a sell side order flow, and then it changes to bullish. So we know that there is a short-term low here, but collectively we would look at this and say, this is the low, this is the high, this is where we want price to play off of. Push is high, so we've now had a bullish order flow delivered. We then have a bearish order flow delivered. How do we know this? Because we are putting in short-term swing highs and lows in here, and we're consistently playing lower until we come back down to our bigger area and look at what happens. We come down to the smaller time frame here. So you can see across here, we put in our major high, we play back to it, we take out a major low, we sweep down, we don't put in a major low until here. Why do we know that? Because it broke these previous structural highs when we were traveling down. We then put in a new low. We play back to the POI. We create a new high because we took out these structures here. We then play low. We break this high. When we break this high and we see a new major low put in, like so, all right, new low, we then look for highs to be ran. Yeah. Why are we expecting highs to be ran? Because we know that we have played from a major low. We've switched order flow. And now we'd look for price to push higher. So we've done what we wanted to do. We've run a high on a larger time frame, which is right here. So this high now has been run. So what does that tell us? It tells us that we can start looking for this to come down to a key area, whether it be, like I say, fair value gap, support resistance, whatever it is you're using, and look for shifts in order flow. Now, we can look at this like so, and we can say, let me get rid of some of these drawings. We can say to ourselves, what have we had here? So we've had a clear bearish order flow coming in. Clearly bearish right here. We've changed from bearish to bullish. So we know that this is our major low. We've now clearly pushed bullish. Now we've started to break down lows. So we now know this is our major high. So what can we expect now? We can expect a pullback. But what is a pullback? A pullback is not necessarily a given. It doesn't mean it's going to happen. If it is going to happen, we can look for price to play from our previous structures. So we can mark this as well, because that would have been a low here. It's not a swing low, but it would be a low. So we can say to ourselves, okay, well, we've broken structure. So we'll just mark it as short-term swing low, which it would be on a smaller time frame, but technically in my criteria that wouldn't actually be a swing low because we had no sell side order flow here. We only had a short-term deviation. But we can look at this and say to ourselves, okay, well, we've been flowing bullish. We've now started flowing bearish. Where is our inefficiencies? Where's the extreme? I'm looking at this POI right here. I'll mark that up properly in a second. Looking at that POI. Yes, there is a massive order block here, and you can track that if you like. But what we want to see now, if we are going to see an efficient pullback, is price do this. Tap in, break down the short-term structure that we've created. Breaking this low, giving us what? A major high, major low. Why is this a major high? Because we've played in with a bullish move, and then we're playing out with a bearish move, giving us a switch in order flow, just like we've had here. Bullish into bearish. Yeah, confirming the bearish move to the downside, which is great. So if we confirm this bearish move to the downside, what would we start to do? We would start to aim for lows to be taken. We'd start to look for the lows to be ran. Okay, not necessarily straight away here. We need to see a confirmed tap in and push low. Why is that? Because at this point, we have not confirmed a bearish order flow. Why is that? Because by taking one low, that does not confirm a bearish order flow. That just tells us we've deviated away from the direction that we were in. We can still come down and play into, for example, this area. Again, purely for example purposes at the moment. This area, and then push high. And we wouldn't have deviated from our large time frame structure. Yeah, we would have just continued higher. But if we come back up to at least a reasonable area, so we can measure our high to low and put it on 50% only, and we can say if we have a pullback which establishes itself above this 50 and then drops low, we can say this is a confirmed high, this is a confirmed high, this is a confirmed low. We've now just put in a new low. So we can say to ourselves, okay, we'd expect price to play back to an area here and deliver lower. Until what? Until we meet a major low. So for example, here. And then we'd start to look for what? We'd start to look for exactly what we see here, which is our order flow taking out a major high and taking other highs, establishing that new upwards trend. Now again, this is technically a pullback move. Why is this a pullback move? Because we have a larger time frame move at play here. So this pullback move is not guaranteed, and it also does not have to play down to the level we want it to play to. It doesn't have to come down to here. It doesn't have to come down to here. It can literally just do this and then take the high again. But why would we expect that? Because when we're traveling up, unless we establish a new order flow, so we need to put in multiple levels, we would expect price to continue running highs. So right now, we would still be expecting this high to be ran. Doesn't mean we're going to trade it to this high, just means we expect this high to be ran. If we react here and start pushing down and take this low, then we can say, okay, well actually no, we would probably start expecting lows to be ran now. And that is where we can start to establish our understanding of price and how we can trade it depending on what targets we have. Now personally, I would not recommend just following a pullback order flow. That's just personally my opinion. I would wait for things to line up. So for example, like down here, you can take all of these sell moves if you like. Once the downside move is clearly established, notice how When do we start playing efficiently? After we take a major low. We start playing back from the high, from the low, back in. We make a new high, we make a new low, we continue to play lower. Exactly the same over here. It's not until we take this high where we start to move efficiently and playing back into those areas and we start pushing high. Overall, if we see the order flow shift and we see it deliver lower, 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 and then it pushes high, breaks back down, reacts at a low, for example, breaks high again, then we can start marking our low, our high, and say, I'm going to set an order here. Price comes down, continues high. Okay, I'm going to set an order here. Price comes down, set high. Where are we going to aim for? The high. Yeah? And the same thing will occur until we reach a larger time frame area over here, which is when we're going to take all of our current ideas off the table and we're going to say to ourselves, well, we know that we've established a bullish order flow. We know that price is taking highs. So we're going to expect price to continue to take highs unless we see a shift in order flow. Now, another great example of this is displayed in the Euro Chef. And we covered the Euro Chef today in our live stream again, so you can go and check this out. This is the 28th of March for whenever this video gets uploaded. So you can go and look at our live stream from that day and you will see us walk you through this. But the same thing occurs. If you look at what we're doing, we're clearly taking highs, right? We were and have been taking highs consistently for a little while. We've been taking highs, taking highs. This was a short term, this was a short term. We took both of them. We know that this is the low. Again, we run back to a low. We take a high. We create a high. We break down some short-term structure, but nothing crazy. We take a high. We create a new low. We take a high. We make a new low. We take a high. Notice how the one thing that you're not seeing. Think about what you are seeing. You're seeing price taking out highs because we're traveling up. But what are we not seeing consistently? We're not consistently seeing the pullback, continue, pullback, continue, pullback, continue. We're not seeing the pullback because the pullback is not a necessity in a trend. A necessity in trend is taking the highs in an upwards trend that are being delivered and taking the lows in a downwards trend that are being delivered. Now the same thing is going to occur on every single pair. Now again, we come over here to the euro. Look at what we're doing here. What are we doing? We're consistently taking highs. We're consistently taking highs. We're consistently taking highs. So what would we expect price to keep doing? Delivering, taking highs. Delivering, taking highs. And again, we walked you through this one as well in the live stream. 28th of March. Head over and check that out if you want to. We established a new low right here. Right, so we'd expect price to play off of this. Mark that up. We expect it to play off of this and do what? Take a high. Yeah, it's only once we stop taking highs and we start seeing lows being ran is when you can start to line up counter trend moves. But a lot of the time you're going to see this order flow switch at larger time frame areas. What didn't we see at this area? We didn't see an order flow switch, so we didn't sell it. Simple as that, right? And once we've established this, if we establish an order flow shift here, where can we start aiming for? We can start aiming for the last major low, or in this case it would be this major low or this major low. But it gives you a much nicer, crisp understanding of multi-time frame targets. We don't want to be, oh, we hit a POI, we need to change direction. That's not how the market moves. It's going to consistently deliver the same moves over and over and over. Now this is AUD here. Now again, I'm pretty sure we covered this in our live stream too. If you look here, we came up taking highs, tapped into this POI, and what do we start doing? We start taking out lows. We create a low, we create a high, we play off it, perfect. We put in a low, we play off the high, perfect, we run the low. We make a high, we run the low. We play back into this swing here, we run the low. This level, we run the low. We keep coming down until what happens? We run a high. Yes, we sweep, but we're starting to run highs here. So what did we say? Okay, well, we understand that we have this unmitigated area. We're running highs. So this area could help us play up to that level, which it has. This area could help us play up to this level, but we'd expect this high to be ran to bring us to here. And then what would we expect at this point? We'd expect price to run lows. Why is this? Because on the 5-minute and the 15-minute, we've started to break down structure, telling us that order flow is changing from a bullish move to a bearish move. We've had a clear impulsive move. We've had short-term shifts bringing us back up. This is where we'd expect price to shift lower. And if it doesn't shift lower or it doesn't change its order flow, what would we start doing? We'd start looking for a high to be put in. Price to run back. Take the high. Price to run back. Take the high until we see a breakdown. Now, like I say, this does not mean that we trade every single move, but what it does mean is when you have a good understanding of, well, I know the order flow shifted here from bullish to bearish. If we see the same thing happening here, which we did, I will find a smaller time frame range and I will take a sell aiming for the nearest low to secure your profits. If we come back up to this level and we react off of this bigger move, where can we look for? We can look for the lows, because what are we doing here? We're running lows. We're pulling back. We're running lows. So when the pullbacks do occur, it gives you the opportunity to get involved with a very clean and consistent targeting system and overall take bigger target profits rather than aiming for short term. Now again, I would recommend starting off small and working your way through, but consistently you're going to see the same thing happening. So please take what I've shown you here and consistently apply it to your charts and allow price to deliver to the next level and allow yourself to target the larger time frame areas based off of smaller time frame order flow. So guys, I hope this video has been useful for you and I hope that it's helped you understand short-term targets, longer-term targets and order flow as a whole. If there is any questions, make sure you drop them down in the comments down below. Check out the Discord down below as well. If you have enjoyed this video, drop us a thumbs up. We would massively appreciate it. And I'll catch you all in the next one, guys. Peace out.